Hello and welcome. Good morning, good afternoon, and good evening, depending where you are in the world. I'm Damien Nussbaum. I'm Executive Director at the City of London Corporation, and it's a huge pleasure to welcome you today to this workshop, which is extremely timely and in an incredibly important area. This workshop is jointly put together by the Secretariat of the London RMB Business Monitoring Group in partnership with IHS Markit, and seeks to discuss the development of the carbon market in China and globally. So as the UK prepares to host COP26 in, less than 2 weeks, it's really timely that we talk about carbon market development today. Many governments, businesses, stakeholders across the globe are now focusing on the transition pathway to net zero in very practical and tangible ways in order to meet the targets set out in the 2015 Paris Agreement, that is to limit global warming to well below 2 degrees and pursue efforts to limit it to 1.5 degrees. And this climate goal requires contributions from all global players, including the UK, China, and right around the world. For corporations, the priority for reaching net zero will be to reduce absolute emissions. And for the industrial sectors, where climate neutral technologies are not yet commercially viable, offsets allow high climate ambition entities to supplement their reduction efforts. So, as a leading sustainable financial hub, the UK has a unique position on leading climate action. And this provides a natural backdrop for the UK to establish itself as a key global partner for trade in voluntary carbon offsets. Earlier this year, the UK helped establish the Voluntary Carbon Market Forum, which the City of London Corporation acts as the Secretariat for. And the forum seeks to implement the framework recommended by the Task Force on Scaling Voluntary Carbon Markets and the market architecture that is needed to ensure that firms and branches of global firms can best promote the potential for scaling carbon markets. Likewise, it's really encouraging to see that China, the world's largest carbon market by volume, launched its national carbon trading market in July this year. And the scheme, which is obviously in early stages, focusing on the electric power sector, is going to have a really far-reaching impact over time as it develops to cover additional sectors across the economy. So investors, and so much of this is going to be driven by the appetite and interest of investors, are now starting to look into voluntary offsetting portfolio emissions through the use of carbon credits and using credits as a way to generate investment returns. As both countries progress with the development of carbon markets, we believe that there are many common areas that both sides can collaborate on. The UK's expertise and depth as a global finance hub can really support China's ETS as it continues to develop and gain scale. Likewise, the size of China's carbon trading market may offer the UK and other global players the opportunity for participation. This and many other areas are the topics which our speakers today will explore further in the discussion later. But first, I'm delighted to invite Mr. Ge Xingang, Senior Researcher of the Beijing Institute of Finance and Sustainability, to share his keynote remarks. Mr. Ge, over to you.
Thank you. Thank you very much for your kind introduction. 各位嘉宾、女士们、先生们，大家好！感谢主办方的邀请，非常高兴参加今天的碳市场研讨会。当前全球各国正紧密携手，合力应对气候变化。那么，全球主要经济体都宣布了本世纪中叶实现碳中和的宏伟目标。 碳市场作为应对气候变化的市场化手段，也将在这个宏伟目标的引导之下，发挥它应有的作用。当然，我们作为推崇和支持碳市场的从业者，我们希望碳市场在实现碳中和的过程中能够发挥更大的作用，以更加平稳、更低成本的方式，帮助我们的社会平滑地过渡到低碳，以及零碳社会。我想这也是今天这个研讨会的目的所在。碳市场的理论定基于科斯定理，实践层面也已经有超过20年的历史。全球很多的国家和经济体都已经开展了不同层面碳市场的尝试，取得了很多成功的经验，也有很多更加宝贵的失败的教训。应该来说，碳市场仍然是一个不断完善之中的新型的市场化的机制。它强烈的政策市场属性、广泛的监管部门参与、精巧复杂的定价机制、不断变动的经济和金融的因素，以及复杂的低碳技术进步的情况，给碳市场的稳定运行带来了很大挑战。借此机会，我想和大家分享3点关于中国碳市场的看法。第一点呢，是中国的试点碳市场取得了很大的成功。从2011年开始，国家发改委在全国5市2省开展了碳交易的试点。从2013年开始，以深圳为首，7个碳交易试点市场呢都陆续启动，到今天已经运行超过8年。在8年的时间里，它主要的成功之处，我认为有3点。一个呢是成功的尝试了不同的碳市场设计和配额分配的方法。比如说强度控制的碳市场和总量控制的碳市场、主户法、基准法以及免费分配、拍卖分配等不同的方法。第二个是它成功的探索了很多的碳金融的创新。虽然因为种种原因，大部分的碳金融创新呢，没有办法在当时的试点碳市场阶段被复制，但是仍然是为我们现在全国碳市场的碳金融创新还是提供了非常宝贵的经验。第3个呢是成功的在政府和企业的嵌入了碳交易和碳成本的这样的一个概念，应该来说是完成了一次理念的普及和扫盲。这是第一点。第二点，我想分享的是中国的全国碳市场仍然处于一个非常初级的状态。从2015年9月中美元首气候变化声明开始，一直到2017年12月份，国家发改委宣布全国碳市场启动，再到2021年7月16号，全国碳市场正式启动交易，中间又经过了6年的时间。那么得益于中国是在去年宣示了我们3060的碳达峰、碳中和的目标，那么全国碳市场今年呢才得以开始交易，应该来说是非常的艰难。全国碳市场启动之后覆盖的配额量占全世界呢是第1位，而且还将扩大覆盖范围。从目前来看，有可能钢铁、电解铝和水泥行业会成为下一个纳入的对象。全国碳市场的启动也引起了国内外非常大的关注，大家对它给予了非常高的期望。比如说，有的金融机构说，碳市场是一个万亿级的大市场开启，也有很多的企业开始询问卖碳能够赚钱怎么样把林业碳汇开发出来卖出去等等。这些理解呢，其实体现了金融机构和企业呢对全国碳市场还存在一些误解，有一些呢不切实际的期待。我个人认为，全国碳市场呢目前还处于非常初级的状态，还需要我们下大力气去完善它。它的这种初级状态呢，主要体现在3个方面。一个呢是定价机制，碳市场一定要有及时、真实、长期的价格信号。碳市场不是说有价格就行，碳市场的价格信号一定要有极高的质量，这样它才能够指导企业的长期的减排决策。这一点呢，目前全国碳市场还做不到需要完善。那么现在广州期货交易所的成立呢，是一个巨大的一个契机关注碳期货的从业者可以多关注一下广州期货交易所在 碳期货研发方面的这个动态进展，这是第一点。第二点呢是市场主体，目前的全国碳市场的市场主体呢还过于单一啊，都是管控的企业，而且现在还都是同一个行业的企业，很容易出现这个要么要缺配额，都缺配额，要富裕配额，大家都富裕配额这样的一个单边的市场。市场的交易呢，很容易出现一些大起大落。那么，比如全国碳市场从开市以来啊，最高的一天啊，成交有1、2个亿，那么最少的一天成交只有几百块啊，这个大起大落太大了。第三点呢是总量控制。那么目前全国碳市场还是一个强度控制的碳市场，而不是一个总量控制的碳市场。强度控制的碳市场，它的问题是没有办法产生真正的减排压力。那么也就没有办法产生真正的减排的动力。那么以上这3个问题呢，每个问题呢对碳市场都很重要，所以呢，我认为呢，全国碳市场目前还是处于一个初级阶段。这是分享的第2点。分享的第3点呢是全国碳市场的这个潜力还是非常巨大的啊。虽然全国碳市场呢现在问题还不少，但是减排的潜力确实非常巨大。只要碳市场的机制设计能够做得更好，减排的压力和动力呢都非常的充足，我相信我们中国的企业一定是能够充分利用好碳市场这个机制啊，把减排工作做得更好。那么具体来讲呢，对全国碳市场呢，我也有2点建议。一个呢是探索总量控制的碳市场。中国的达峰时间呢已经确定了，这意味着我们中国的碳排放一定是有峰值的。而且主要的高能耗、高排放行业自己目前也在测算和承诺行业的碳排放峰值。那么有了峰值，就意味着可以给碳市场的管控企业设定总量控制的目标，而不是一直以来我们试点的碳市场和全国碳市场做的强度控制的目标。如果觉得全国碳市场这个做总量控制的碳市场这个太早，容易有风险呢，我个人建议可以在试点的碳市场里面先试，这是第一个建议。第2个建议呢是搞活市场。搞活市场呢，不是说是为了增加交易量，或者说是单纯的增加流动性来搞活碳市场，而是要从发现真实有效价格的角度来搞活碳市场。要从市场的监管、交易的品种、交易的方式、交易的主体、企业风险管理的需求等多个维度和角度来健全碳市场它必须要的生态，把碳市场变成一个真正可以帮助企业管理长期碳风险的这样的一个市场。以上呢就是我对于中国碳市场的介绍，供大家参考，也希望呢各位专家立足全球碳市场，特别是欧盟碳市场、美国碳市场以及英国碳市场的经验啊，都为我们中国的碳市场的这个献计献策，让我们中国的碳市场为我们中国的减排以及全球的减排做出这个更大的贡献啊！谢谢大家。
Mr. Good, thank you very much for a really helpful overview of some of the challenges and the potential, and some great ideas there at the end on what practical measures could be taken next. And you have provided a great link also to our next speaker, because you talk about the contribution right around the world, China, EU, UK, US and beyond. And I'm delighted to now pass on to Andrew Fleeter, Product Head for Sustainable Finance at IHS Markit, to share with us a short presentation on the overview of the international carbon market. Andrew, over to you.
Thank you, Damien. Hi, everyone. My name is Drew Fleeter. I am the Product Head for the Registry and Meta-Registry products at IHS Markit. And I'm honored to be participating with the City of London and to collaborate on such an important discussion today. I'm just checking, are the slides being shared? So the plan today is to give you an overview of the broad range of carbon markets that we see in existence today. We've been asked to speak to this due to our experience and expertise in the carbon markets and environmental markets more broadly. Our group has been in the markets for over 12 years at this point and work with 30 plus governmental and voluntary programs globally. We provide infrastructure solutions like registries and auction platforms, as well as the range of other services to the markets as well. We work with our governmental, NGO, and corporate clients, helping them through the full evolution of the environmental market, starting at the inception, the design of a program, through to determining how to promote liquidity and transparency in the markets and connectivity as well, connecting registries to exchanges, auction platforms, other registries, governmental systems as well. So moving on to the next slide. So the previous speakers gave a wonderful introduction as to why we're talking about this today. So it won't dwell too long on this, but 192 parties to the Paris Agreement, and the Paris Agreement has done a fantastic job of promoting a bottom-up approach where governments can make their own commitments and take the steps necessary in order to fulfill those commitments. So among those commitments, we have 127 net zero commitments, and that's fostering pledges in the private sector as well. We've seen over 1,000 companies make net zero pledges. And in terms of how we see these commitments taking shape and how we see them being implemented, we see them implemented in a range of different ways. But we wanted to speak to the way that carbon pricing instruments are being implemented today and speak to them in three different ways. So one, compliance markets. We see that compliance markets now cover 22% of global emissions. The voluntary markets are growing tremendously as well, and now are worth this year over $1 billion annually. And then the national and subnational markets, which are poised to come on the scene as well. We're seeing large volumes coming there and a lot of potential in the national and subnational markets as well. So moving on to the next slide. So first, we'll start off with compliance markets. So we see a broad range of carbon pricing mechanisms that have been implemented globally to date. There's over 60 carbon pricing mechanisms. And when we talk about carbon pricing mechanisms, the two most common ones, carbon taxes and cap and trade schemes. And you can see kind of the broad variety of mechanisms that have been implemented globally to date. They're varied in nature and reflect the different levels of maturity and ambition, as well as specific local conditions for each of the regulated jurisdictions. And so we have markets that have been around for a long time, like the EU ETS and California's cap and trade scheme. We see jurisdictions learning from one another. See the California's low carbon fuel standard, inspiring similar regulations across North America and South America. It's obviously one of the main topics today, which is the national ETS in China. And then carbon taxes that are bringing in offsets like in South Africa. So moving on to the next slide. Now, touched on previously how compliance markets evolve and how there's a lot of different choices that can be made in the design of a compliance market. And not just choices that can be made at the point of creating the market, but determining how to add complexity, scale ambition, how to grow the market, and the impact of the market. And so there's a number of different components. There's a few here that I'll highlight in terms of how these components, how the choices can evolve over time. First being the industries covered by a carbon pricing instrument. Initially when you see a market come online, sometimes it covers just one or two industries, and then over time can grow to covering 3 or more industries as the market gets into place. permitted participants. Typically, the market initially will just cover the covered entities to make sure that they're appropriately onboarded to the market and that the market is functioning correctly. But over time, you see financial intermediaries that get permitted to participate to help with supporting liquidity in the market as well. Allowance allocation. So typically we see kind of a simple approach of something like free allocation of allowances at the outset of the market, and then it can evolve to having more and more of the allowances auctioned into the market over time. Offsets are limited, typically limited in a market at first, and like we'll see with the national ETS in China, 5% of a covered entity's obligation can be covered by offsets coming from the CCER market. And then over time, as the market evolves and grows in complexity and scale, offsets can be more broadly permitted. Price mechanisms, we see the need for some certainty in terms of what the pricing is going to look like in the market, and that can go into place in terms of a price floor as well as a cost containment reserve. And then linkages. Regulators at first are inwardly looking at making sure that the market gets up and running before then moving on to recognizing that the market's functioning and determining what other external markets to connect to and what sort of linkages to put in place. And this is all of these different components are reflected in terms of the variety of market implementations that we see today. Shares of emissions for these carbon pricing instruments can range from as low as 5% to 80%. And pricing in these markets varies pretty tremendously as well, from as low as $1 to over $100 per unit in the market. And then on the next slide, we have some comparisons of some different markets that are at different stages of maturity, including the national ETS in China, the UK ETS, South Korea's ETS, and the plans for an ETS in Indonesia as well. And we see different sizes in terms of the national ETS in China covering 4 billion tons per year, and other markets being smaller. Sectors being covered. The power generation sector in China is covered. In South Korea, there's a number of industries that are covered in the ETS. Permitted participants, South Korea is now, as they've moved into phase 3, allowing more intermediaries to participate in the market. And I spoke to the 5% of an entity's emissions in China that can be covered by offsets, and we'll get into that in greater detail when we move into the voluntary carbon markets discussion. On to the next slide. And so launched the Global Carbon Index at IHS Markit, which reflects the performance of a weighted mix of the 3 most liquid compliance cap and trade schemes, those being the EU ETS, California, and RGGI. What we can see here is that the pricing has gone up over time, and that's something that you would expect to see as the markets kind of take hold, and as the price setting within the market kind of moves up to those who have higher marginal costs of abatement. So moving on to the next slide. Next, we'll move into the discussion of the voluntary markets. So voluntary markets involve offsets, which are emission reductions that compensate for emissions occurring elsewhere. Those can be generated through sequestering emissions or from avoided emissions, so basically taking activities and replacing them with other activities that generate less emissions. Programs can vary. Programs are the entities that create the rules for what constitutes a project and what constitutes a credit. They create the methodologies or approve the methodologies and are responsible for creating the rules which ensure the legitimacy of the projects and the units and the market more broadly. These can range from international offsetting programs like VCS, Rivera, Gold Standard, Global Carbon Council, Plan Vivo, Climate Action Reserve, and others, as well as domestic programs. We've spoken about the domestic program in China, as well as the UK has domestic programs, the UK Woodland Carbon Code and the UK Peatland Code as well. And then in terms of how the voluntary markets function, there are project developers who are the entities that are going out and doing the emission reductions work, going out and sourcing the projects globally. They then engage with validators and verifiers, which are independent third parties, which validate and ensure that the work will take place in the way that it's been documented by the project developer, and that once the project is up and running, that it is working in the way that the project developer is reporting that it is. Once the units are issued in the market, they can be sold to resellers, like brokers and traders that serve to connect buyers and sellers within the market. They deliver credits to end buyers. End buyers include corporations and really any party that's looking to retire credits, taking them out of the market for the purpose of making a carbon neutrality claim. So moving on to the next slide. So here we just see the broad range of different project types, different projects, the geography of projects globally, as well as the purchases. All the countries in green on the map are the location of projects across the voluntary markets globally. And we see a range of different buyers in the markets. There's energy companies like Shell and BP. There's technology companies like Facebook, Amazon, Microsoft, and Apple, airlines like Delta. And these purchases are all participating in the market for different reasons. There's a number of different reasons that that entities may participate in the market. Maybe that they have compliance obligations and can purchase offsets for you bringing them into a compliance program, like in the case of South Africa's carbon tax, where you can apply VCUs from the VCS market, gold standard units, as well as CDM units from the United Nations CDM market to bring that in to the carbon tax program. They may have pre-compliance obligations or may want to kind of get comfortable with the markets in terms of understanding how the markets work. And then also, like I mentioned, may want to make neutrality claims as part of their decarbonization strategies as part of the implementation of their work related to that. And so we've touched on some of the points of intersection between some of the voluntary markets and some of the compliance markets, but across the board, there are a range of markets which allow for offsets to be used, and where we see the intersection between the voluntary and the compliance markets. The UN CDM is the most commonly applied program or commonly accepted program into compliance programs. It's used in 6 different programs across cap and trade and carbon tax programs. We see some of the US-based voluntary programs like ACR and CAR permitted in some of the state-based programs in the US, and then highlight the CCER market in China, where the national ETS only permits units from that market to be applied to the ETS. We do know that there are a range of projects occurring within the other international voluntary programs as well, so there's potential to apply those domestically, as well as potential for units to be applied in other markets and other jurisdictions as well. So finally, we wanted to speak to the national and subnational markets as well. So when we speak about the voluntary offset programs, they're typically project-based individual projects that are being developed in accordance with the rules of the program. In contrast, national and subnational schemes are activity-based, they cover an entire jurisdiction, whether it's a state or a province or an entire country. And to reduce leakage within that entire jurisdiction and to avoid the high transaction costs associated with doing individual projects and allow for a jurisdiction to have greater control over their strategies within their own jurisdiction. So all of the countries in green here are red plus countries, or countries that are potentially poised to be suppliers of units globally. And we've highlighted a few different jurisdictions here and kind of where these markets are at in their development. So we have the state of Acre in Brazil that has issued 28 million units in their program to date and have 90 million more historic vintages that can be issued, as well as the potential to issue 8 million credits per year moving forward. Gabon has the potential to issue 10 plus million units per year, Indonesia 50 plus million, Papua New Guinea has issued 9 million units to date and is planning to auction off some of those units at the COP in a few weeks' time, and they're expecting to issue about 4.5 million units per year moving forward. So then, in terms of wrapping things up here, in conclusion, we've spoken about the compliance markets, the voluntary markets, both the international programs like BCS and Gold Standard, as well as domestic programs like the CEC-ER market and the UK Woodland Carbon Code and the UK Peatland Code, and the emerging national markets and subnational markets as well. We'll expect for these to increasingly converge and for the lines to continue to blur between these three different markets. And we see those lines already blurring to date in terms of how the markets are interfacing with one another. There's definitely some challenges to the growth of the markets in terms of managing the convergence of those lines and making sure that the markets are able to scale. And these are topics that are being worked on through the Task Force for Scaling Voluntary Markets, as well as the UK Voluntary Markets Forum, taking the steps that are necessary to ensure that these markets continue to grow and continue to scale to match the ambition behind them. So with that, I thank you for your time and look forward to moving on to the panel discussion.
Andrew, thank you very much indeed for a really excellent overview. You've done a magnificent job in packing so much into 20 minutes. That's been brilliant. So thanks very much to Andrew and IHS Markit on that. And now we move to the panel. I'm very pleased to introduce the chair for the next session. Michael, it's great to see you. Michael Sheeran, who's a senior advisor at the Bank of England. He also co-chaired the G20 Sustainable Finance Study Group with China in 2016. And Michael will be joined by three experts from the industry, and they are Kathy Bernini, Managing Director and Head of Environmental Solutions at IHS Markit. Very good to see you again, Kathy. Claire Coe, Senior Analyst in the London Research Centre at the London branch of the Bank of China. Warm welcome to you, Claire. And Chris Leeds, the Head of Carbon Market Development at Standard Chartered Bank. Very warm welcome to you as well, Chris. Michael, over to you. Looking forward to the panel.
Damien, thank you very much. Wonderful to see you. And I completely agree. The previous speakers have done such a wonderful job of setting the table for all of us here at the panel. And I guess before we get into a deeper, more intricate discussion with the panel, I wanted to say a few words just kind of set the table. I mean, one of the first things I'd like to thank the City of London. They've just done a wonderful job of bringing the right people together to have this discussion. They're always very interactive in trying to bring not just the London markets, but the global markets together. The work we've been doing over the years with China has been outstanding. And as many of you recall, Dr. Majin and I, as you mentioned, Damien, co-chaired the Sustainable Finance Study Group. And I think we really drove a lot of the international discussion on that. And the carbon markets are such an integral, important element or piece of this. But I even think back to the very first green covered bond China issued was on the London Stock Exchange. And it was great to work and cooperate together between the UK and China. And it's great to see this work going on. And I guess when you get to carbon markets, you really can't really talk about them without talking about the work that China's done with the new market, that's carbon market that started this summer. I was involved in some of the very early provincial test runs and different pieces of work that went on that, and they've just immediately started with the largest market out there. But as Andrew pointed out, there's markets everywhere around the world, both here in the UK, in the EU, Asia, everywhere. And it's going to be one of the great challenges of trying to, as things start to converge. And again, Andrew pointed this out, and this will certainly be some of the areas we talk about. Certainly, IHS Markits talked about convergence on registries, which will be very important. Also having regulatory regimes around things, how do they coordinate and connect together, are going to be absolutely essential. But without going into huge detail on this, without a doubt, the time is really now around carbon trading, carbon markets, and carbon pricing. With COP literally days away, and the carbon corridor that we have to stay within to reach the Paris Agreement, at this point, it's fleeting. It's not even close. So basically, we really need to find concrete ways to actually reduce carbon. And so the carbon trading, the carbon registries, the carbon pricing are really at the forefront of this. And how do we start connecting those to the real economy and then working them into the financial system? Now, recently, the IMF came out in June and talked about the need for a minimum carbon price. And that was across at least major countries and major industries. The OECD, again, reaffirmed their view on carbon price and carbon trading. For the first time ever, after a Venice meeting this summer, the G20 ministers came out and agreed there needs to be a price on carbon. So the discussion is really, really focusing on carbon, pricing it, trading it, capping it, organizing it. And this group is really at the forefront of this. A lot of the people that we've got both here on the panel, as well as those that have been involved in this, have been some of the market leaders in this. So what I would like to do is move quickly into some of the details around what each of these different groups and each of the different participants can bring to the discussion. Now, I'm going to very shortly give each of them 5 minutes to kind of give an overview of what they've been specifically doing. And again, as we brought out, we've got Kathy from Markets and Claire from Bank of China and Chris from Standard Charter. And again, the work that was done on the task force, they've been involved in. So they've been putting input. So I'm going to give them 5 minutes to kind of talk about that. Then what I want to do is really open up the discussion and make it a robust and challenging discussion about what needs to happen to actually move quickly and in a way that's really quite profoundly quick to start decarbonizing, because that's really the trick. We're not even close to our carbon corridor. So I think we've got the right people here to speak freely and honestly. We've got the biggest players, two of the biggest markets, China and the UK, and we've got people who have been participating in one of the most important groups and discussions around the task force here on carbon markets. So without any further ado, what I'd like to do is move to Kathy Benini with IHS Markit. You've been involved in both the task force, a variety of things. I'd like you to kind of pick up and take some of the things I've talked about, build on what Andrew said, give us your 5 minutes views on this. We'll move on to the others, and then we'll really start trying to unpack this and give the people that are listening a real opportunity to think how their organizations can play a role and what they can do to help advance carbon market pricing and trading. Kathy, I hand it over to you for the next 5 minutes or so.
All right, thank you, Michael. We thought we'd start off just with an overview so everybody's on the same page with the supply and demand discussion that's existing in the market. So if we go to the next slide, some of the things that have just come out in the market is Barclays just issued a report the other day, putting the voluntary carbon market at reaching over 250 billion by 2030 and 1 trillion by 2050. Also key in that report is that they saw nature-based solutions, the ability to offset over 10 gigatons. And that their next quote was really in talking about the Task Force for Scaling Voluntary Markets and the UK Forum, is that this market, the current illiquid by bespoke type of voluntary carbon market that has existed, could more standardize and grow to that potential of 250 billion in value. And I'm going to get into a little bit more detail, but one of the quotes from the Task Force for Scaling Voluntary Market is that in order to meet our Paris 1.5 degree goal, we need to reduce by 23 gigatons by 2030. And the voluntary carbon markets has just reached the 200 million mark in 2021. So a big gap. So let's go and look into these numbers a little bit more by going to the next slide. So this was from the Task Force for Scaling Voluntary Markets, that in order to reach that goal of 1.5%, we need to reduce through decarbonization and the remainder from offsets by 23 gigatons by 2030. And then, of course, further reductions to 2050. Let's go to the next page. Now, this was a very interesting slide from the Task Force for Scaling Voluntary Markets. It showed us what we need to do per sector and identified that that gap of 23 gigaton will include both emissions reductions and carbon sequestration, but that a scaled offset market can really help in the hard to abate sectors. So it's hard to judge, but the task force has defined at a minimum, we'll need 2 gigatons, sorry. It's large volumes, hard to fathom, but 2 gigatons a year at a minimum. And to help, and that will increase depending upon how well industries can reduce. Going to the next page is we have this scaled up demand, but what has been the activity in the voluntary carbon market? And in this from the task force was showing through 2019, where the voluntary markets had issued 140 million in that year, far from the scale that we need to get to. And that's why the task force and the UK task force was created to help support and put structure around the voluntary market so that effectively we can scale it to the size that's needed to meet our ambition. Next slide. So this is just another view and a more updated number that, you know, we were able to hit in the voluntary carbon markets over 239 millions of credits were issued. And this is just a quick reference of what the average price that Ecosystem Marketplace came out in their report over 2019, 20, and 21. The price is increasing, but as we all know, the price is not there yet in order to unlock the type of ambition or volume of supply that's needed for this marketplace. Go to the next slide. So one of the things my colleague Drew brought up is that the voluntary carbon market, and we're going to talk about how it can scale, but we also have this national and sub-jurisdictional credits that will be available for voluntary markets as well as corporate offsetting. And just to give you a flavor, that here's a few of the markets and their potential on an average annual is around 700 million credits a year. And with their historical units that they are bringing to market, that will help us in the short term to start meeting some of the supply as the voluntary market ramps up. So let's go to the next page, just as a quick idea of what will take us the pricing that's needed to be invested in nature-based solutions, because nature-based solutions can really scale. IHS Markit had put it from 1 billion to 4 billion based upon an increase of price per ton. And as Barclays came out the other day, that by 2050, they believe nature-based solutions can be up to 10 billion for supply. So we see nature-based solution as helping to fill the gap. As we said, the Task Force for Scaling Voluntary Market identifies we need between 2 gigaton to 23 gigaton. And of course, we anticipate much decarbonization. So maybe what we need from an offset basis is 2 to 5 or 6 gigatons a year. And the solution is scaling and the efforts to put more infrastructure, more transparency, more credibility in the voluntary market in order to put the money in with financing and help grow the nature-based solution. And sitting alongside of that is the markets, the national markets and the subnational markets that can contribute, because they can easily contribute very quickly 1 billion credits a year. So between the voluntary market growing and the national and subnational markets bringing their nature-based credits to the market, we have a pathway to be able to offset that increased demand that we have. I think that's the last page. And I just wanted to start with that. I'm happy to ask questions about how the market grows. And I know, Michael, you'll bring us to that. I just want to sort of set a stage of where we are from a supply and demand perspective.
Kathy, that was brilliant. There's so much that you've unpacked in there, everything about how do we fill the gaps around, nature-based solutions versus absolute reduction within companies. We can talk about that when we get to the open discussion, the pricing mechanisms, other incentives, voluntary versus at some point we'll need compulsory, but that's all waiting for us in the Q&A piece. But those are just really a great job of setting the scene. I'd like to move now to Claire Ko of the Bank of China, who's going to also give us the China carbon market development and that forward-looking perspective from China's point of view. And Claire, I'd like to hand it over to you now, please.
Thank you, Michael. Mr. Ge has provided a very comprehensive picture over the China carbon market. So in the next few minutes, I will just give a very brief background of the China ETS, then move to the outlook. So in last September 2020, our president, Xi pledged to achieve carbon neutrality by 2060. So government then launched the national ETS in this July as the key policy instrument to implement. But actually, carbon market is not a new thing in China. We started operating ETS at the regional level since 2011. So we now have 8 regional pilot ETS. They are still running in parallel with the national ETS. In the future, those pilot ETS will merge into the national ETS. In this initial stage, the China ETS covers power sector only, but by the end of 2025, there will be 7 carbon-intensive sectors be included. At that time, the total emission will be accounting for 72% of China's total emissions. So between 16th July, which is the launch day of the China ETS, till 18th October, there are more than 118 million tons of carbon emission were traded, which amounts to 43% 2020 combined total of the 8 China regional pilots. So those in dollar turnover terms amounted about $1,252 million, which representing 67% of the 2020 combined total. And our price start from $7.5 and reached the peak at $9.38, and now is around $6.52. So for the same period, in comparison with EU ETS, which has the highest carbon price in the world, which is 75%, and we still have a long way to go. But comparing with the US RGGI price, which is $10.25, the gap is not that big. I think I would say that the carbon price of China national ETS is on the right and positive track. And China ETS is designed to be a carbon pricing discovery tool of the market mechanism with linkage to the international market. Like Andrew just presented, the China ETS is on the road from the pilot to mature. Our government has been working intensively on the ETS architecture and the system architecture, the regulation framework, and the voluntary market infrastructure to open the voluntary market. Right now, the ETS voluntary market is only open to the regulated firms only, and the limit is 5%. So there are no financial institutions involvement, and the market is not financialized. But once the ETS opens the voluntary offsetting market to the financial institutions and investors and other, voluntary emitting firms, it will play a much better role for carbon pricing discovery. Government's key working areas, including the improvement of the emission measuring, reporting, and verifying, which is also called MRV functions, and they're also revising the system architecture and the regulation frameworks in areas of MRV, rules and penalty, and incorporating carbon derivatives in the China futures law to make it a financial product for the voluntary markets. And China government also established pilot voluntary trading exchanges and try out the voluntary trade in Beijing, Shenzhen, Guangzhou, and Hainan. And with regard to the international linkage, those exchanges, it would be more focused on the investor rather than linkage with other ETS. And so those exchanges in Shenzhen, Guangzhou, and Hong Kong Emission Exchange, located in the Guangdong, Hong Kong, Macau Great Bay Area, they are cooperating on the development of open carbon market access to international investors. Efforts they are made in areas of regulation framework, system architecture, guidance, and standard setting. Right now, financial institutions are yet to participate in the China ETS directly, but most banks are preparing for the entrance. For example, Bank of China, we recently pledged to funding at least 1 trillion RMB in green sector. Some of those will be used on the development of carbon finance products and services, and support the China ETS market improvement. And this area is in our Bank of China Group green finance strategy. We expect our strategy will be sustainable, beneficial to both, the climate change control and the revenue, because once China ETS opens its voluntary offset market to financial institutions and investors and other voluntary emitting firms, the estimated yearly volume would be around $15 billion. That's all from me. Thank you.
Thank you so much, Claire. That we could spend the rest of the panel talking about the amazing work that China is doing. As I mentioned, I was there 5 years ago when all of the provinces were starting their trial and their pilot programs, what's been launched. I thought was particularly interesting is the pricing mechanisms, and we'll get to that. I mean, the fact that you pointed out you've got $6 to $7 per ton in China. I think Singapore threw in $45 recently. I know that at least heading towards 2030, you've had the Bank of England's talked about 120, I believe, dollars per ton, the OECD around 130, that range in there. I've actually even heard of some people saying if we don't get the reduction going down fast enough, it could be as much as $2,000 per ton. So pricing mechanisms alone, the reporting, the validating you talked about in China is really interesting. And also what Bank of China and the other Chinese banks are doing to become participants in that market. As I said, we could spend the rest of the time on this. Unfortunately, we've got to, well, or fortunately, we have to go to Chris, because Chris is with, leads with Standard Chartered Bank. His CEO, Bill Winters, led the task force, and very much looking forward to see what Chris has to contribute to this group. And Chris, I hand it over to you now.
Thanks very much. And yeah, look, it's quite a hard act to follow all the other speakers. So you know, there's a lot has already been said. So hopefully, I will be able to add to this contribution. And as you said, Michael, I work at Standard Chartered. I've been supporting Bill Winters as in his role as the chair of the task force on the scaling the voluntary carbon markets. And the TSVCM has now moved from being a task force to an actual established body. So there will be a governance body has been put in place. I'm actually one of the board members. There's 21 other board members, very, very diverse, both geographically, ethnically, and also in terms of the backgrounds. We've got academics, we've got markets people, and we've got people from civil society as well. So it's a really, really strong board, I think. And you know, we've heard a lot today about the different types of markets out there, the compliance and versus the voluntary markets. And my view is that actually over time, and we've heard this said a couple of times already this morning, that these markets will converge in one way or form. But at the moment, they are very much separate. And a compliance market is exactly that. It is mandated usually by, you know, a government or a jurisdiction, and probably the most famous is the EU ETS, or it has been over the last 16 years. And it has grown into the biggest market in terms of the volumes that are traded and the value of that market. But in terms of coverage, the China ETS it covers more emissions. I think it's about 3 billion tons in China, whereas the EU is now down to about 1.7 billion, which is interesting in itself because it started as a market that covered around 2 billion tons, and that just show you the impact that it's having. The EU ETS has allowed or seen emissions reductions in Europe of over 20% since 1990, and of course they're now focusing on reducing those emissions by 55% by 2030. So that's actually they're going further than the previous target, which was 43%. So you know, the mandatory markets have worked. There's a study that was out recently to say that the EU ETS was responsible for a reduction of 1 billion tons of emissions between 2008 and 2016 in Europe. So it does work. And I think the other thing to say is that we do have a carbon price largely across the world, but unfortunately it tends to be zero or very close to zero. EU ETS is different in that it's showing a price that's considerably more than that, and recently up at 60 to 65 euros. You know, that has a big impact in terms of reducing carbon emissions, certainly within industry, and over the long term it's had a big impact in reducing emissions from utilities, and particularly from coal and largely natural gas now, as Europe is moving from those technologies towards renewables, wind and solar in particular. So you know, there is that that point, but we need to really put in place the mechanisms that are actually going to demonstrate that we are rapidly running out of a carbon budget. I think it was last estimated around 570 gigatons of CO2 left to keep us within that 1.5 degree limit. But that is running out pretty quickly. And you know, we need to demonstrate that it is a scarce resource, and that there needs to be a value attributed to it, to really recognise that scarcity. Now, carbon emissions trading, whether it's be voluntary or compliance, this is just a tool. You know, this is one of the tools in the box. You know, absolutely, companies, governments, people around the world need to be focused on reducing their own emissions first. But what a carbon price does is it produces the signals. It makes the emitter pay for their emissions. Yeah, at the moment there is a market breakdown because we're not actually we're not pricing that that externality of carbon emissions. So this is really what we're trying to do with a carbon market. And the more global it can become, the better it is for everybody, and the more equitable it is for everybody, because then it is a price that is going to drive emissions globally. And this is one of the concerns that people have about the EU ETS, for example, is that all they're doing is just displacing emissions from Europe to other parts of the world. The global nature is important. Now, COP26, as we're all aware, is about to start the week after next. One of the areas that people are going to be looking at is Article 6, the international trading mechanisms that sit within the Paris Agreement, that still are not yet finalised. So there's a lot of work to be done around that. But even if there isn't a definitive solution, and I do hope there will be, I think that this is where the voluntary carbon markets can come in. So you know, we heard about what's happening with voluntary carbon markets from the other speakers, but I think it is important to understand that this is an area that is going to grow. We have to make sure that the integrity is there. So if you pop onto the next slide, please. We have to make sure that people are aware that they've got to measure those targets, set their targets. They've got to reduce, and then they've got to use carbon credits as at the end of that process. Yeah, it's not as a last resort, it's complementary. We want to see companies and people compensating for their emissions on the path to net zero. And this is what's really important. It's this whole idea of something that's over and above what people are already doing, and ensuring that the money that is being provided to these projects goes to projects that are of high integrity, of high quality, that actually do what we want them to do, which is to reduce carbon emissions that wouldn't have happened otherwise. So if you pop onto the next slide, please. So this is really what the TSVCM has been about, that high integrity of carbon credits, high integrity market, but traded in a robust, transparent and liquid markets. It is the importance of trading and the importance of markets. Markets bring the capital, they bring the access to funding for projects around the world. They bring buyers in one part of the world, in Europe, in the UK, in America, to sellers in another part of the world, within the emerging markets, and as Kathy mentioned earlier on, within those areas where there are great forestry projects that we should be developing to really ensure that the world's natural capital is protected and improved. So, you know, this is really what we've been trying to do. The task force is now properly established, and we'll be developing our core carbon principles over the next few weeks and months, and hopefully you'll be hearing more about that in due course, to really ensure that we get this high quality. But then it's working with the various players around the world. And Standard Chartered, we've been part of the Greater Bay Area initiative through the Green Finance Alliance. We're working closely with other institutions, with the Climate Impact X in Singapore, which we are a part of the joint venture, and a number of other initiatives to really help to bring that those connections between those markets. And what we would love is for China to adopt the core carbon principles within their own ETS, so that then you can see that fungibility of those credits, the standardization of credits, and see them traded in China, in Malaysia, Indonesia, America, the UK, and elsewhere. So that's really the kind of focus that we want to see. And with that, I will hand back to Michael for the panel discussion.
Again, outstanding. I just shot an email to the City of London, asked if they could give us another couple hours to extend our chat. Unfortunately, they said no. So what I'm going to try and do is ask you both, all of you, to attack two different questions. One is a technical question. What technical barriers out there, and these are on the kind of little nitty-gritty things that make voluntary or compulsory carbon markets work, whether it be coordination of registries, price exploration, incentives, validation techniques, or even whether mandatory versus voluntary disclosure. If you could each select one, I would call technical issue barrier, and where you think there could be a solution on it. And then I'm going to come back to you. I'm giving you a heads up on the second one, is on a bigger macro thing. How do we start convergence and cooperation? I mean, I'm a creature of the G20 and international organizations. How do we get within the G20? We've got 82% of all carbon emissions are in just those 20 countries. How do we bring the compliance market, the voluntary market? How do you see them coming together? What are possible ideas, recommendations on that as the second piece? You can do them separately or one. Actually, I'm going to let you handle both questions at the same time, because if I just try and do two circles of you all, basically, I don't think I'm going to get to you. So basically, Kathy, let's start with you. You've had the most time to listen. So one technical thing and one bigger macro thing to bring the convergence.
So I think from a technical perspective, as we know, there's up to 190 countries that signed the Paris Accord, and half of them have announced doing cap and trade or a carbon tax, some kind of pricing mechanism. With that is the development of infrastructure in each of those countries, registries, exchanges. And we see one of the biggest challenges for growth in environmental markets is the chance of double counting and double claiming. So if you don't have credibility in the market, a lot of the stuff that we're all trying to do is going to be destroyed. And one of the things that the Task Force for Scaling Voluntary Market, the UK Forum, the World Bank is the support of creating a meta registry for the markets. And that is one of the things that would help integrate many of the programs. So the concept is to connect registries that exist throughout the world into one central database. We've chosen to do one based on DLT technology. So using enterprise DLT for just the security level. But from a registry perspective, the way we've designed it is to just have a simple API to include issuances, cancels, and retirements, taking all the information in, checking that each project is not registered in more than one program. In every country, a lot are struggling they want to incorporate private projects, but they don't know where they are. So there's Gold Standard, there's VIR, there's Plan Vivo. They have their own national programs. But by bringing them all in and providing each country in sub-jurisdiction with their own ledger to see what's happening in their country, and then to include the voluntary programs participating. And we have a group now that's working with us to pull in all the data. So every single project and then every single credit can be checked that it hasn't been double counted, that it hasn't been somewhere else. Just think about the ability that nobody's going to see in a New York Times ad or another ad that two companies bought the same credit from different programs that were in the same location. So that's important. And with double counting I think that's number one. The second is double claiming. We're all anxiously awaiting Article 6 and the outcome, but there are a few different ways it can come. And by being able to, whether it's agreed to have authorized units that are traded or however it's done, it's to track it in a central location along with the check for double counting. And I think if we can do that and have the integration of all the programs, whether it's compliance or voluntary, it's one central database, one place for people to get reference data, which would enhance traders and banks. You want to know what you own in your inventory. There's a lot of benefits as you develop this. You have connectivity. Each registry doesn't have to connect to 10 exchanges. They could connect to one platform, the meta registry, and then they approve which exchanges they want to be connected to. Because we want to bring liquidity to this market, right? First, you want to have credibility, transparency, and then you want to upgrade and have the infrastructure for high volume tradings. And with that comes requirements, as you've talked about, Michael, pricing, and I'll let my colleagues talk about the other necessary ingredients, but it's getting the credibility, number one, which the Task Force for Scaling Voluntary Markets and the European and the UK Forum is helping with the quality and the comfort level and the quality of the governance around that baseline. So I'll stop there.
Okay.
And thanks, Michael.
Brilliant. Claire, I'm going to hand over to you. If you can just give us your, we're down to our last 5 or 6 minutes. What do you think, both from either technical and or a kind of a macro convergence point of view, recommendations based on your knowledge in the markets and experience with Bank of China and in the Chinese system?
Thank you, Michael. I totally agree what Casey just mentioned, and I think it's a common view shared by all the people who really looked into the carbon markets. And so I'm not sure I should repeat on her, and but I echo her. Obviously, I totally agree. But from what my how I think about from those days looking into the carbon market, I think the fundamental issues is the data, is the emission data collecting problem, and because without the a clear or high quality, consistent and comparable emission data, no one can set clear targets and metrics. Therefore, we won't have a standard that is working for each country. Therefore, we can't, link the carbon markets or make the trade standards to be agreed by all the country. The same issue goes to the Article 6. I think, the reason from last year, many countries could not sign this because they are not sure those, metrics or targets are working for their own country. But from the government level, because of the data technology, we don't have a very good emission data technology that help us to collect and measure the exact emission volume. That's why it's really hard to set the targets and the metrics that we're working for the net zero plan. UN mentioned that our economy suffers from very very bad investment to the green technology. I totally agree with that. I think our approach to the net zero, it should be a science-based approach instead of a goodwill based approach, because without the science and technology, it's impossible. We can measure the risk. To measure the climate risk, we need the data. We need to know clearly, what's the exact emission data, so we can set up a good plan to achieve the net zero goal. So I think the fundamental issue to both compliance and the voluntary market is we need a really good data technology to support us to collect the emission data from the beginning. Then we can work all the rest. And this links. This also just link it to my answer to the your second question.
Thank you.
Yeah.
Go ahead, Claire.
Mm.
No, thank you very much. I mean, look at Kathy, I completely get you want to have train tracks when you move from one registry to another, that you're on the same tracks, you can collect it. Claire, you want not just good data, but also the technology to collect that good data. Two absolutely essential technical elements. Now, Chris, I'm going to hand to you. And again, what are your technical and or your macro views in terms of what we can do? If you were talking not only to your boss Bill Winters or my ex-boss Mark Carney, let's say you were talking to the head of the UN and say in national leaders, what do we need to do along with getting better data collection, making sure we're not double counting, we're not double claiming. What's your contribution here? I think I've lost Chris. We must have intimidated him by the questions and by the strength of both Claire's and Kathy's input. That certainly got him out. Well, while we're waiting for Chris to come back, what I'd like to chime in briefly, which was going to be kind of my closing views on this, is and I think I'm going to take more of the macro point of view, because both you, Kathy, and Chris, and Claire are technicians, and you've been technically working on this. But from a macro point of view, and from having worked in the G20, seeing international cooperation in this is absolutely essential. And, you heard me say earlier that the G20 countries combined are 82% of the emissions. It would be great to have all of the other countries cooperate with them, but having them organized together and start working through some of the technological issues, but also some of the big issues about where you find that convergence between compliance markets and voluntary markets. Because as Chris rightfully pointed out, and I believe Kathy did as well, the carbon corridor is closing quickly. And it's not a shell game. We really do need to physically reduce, we need to physically reduce the amount of actual carbon going in the air. So I suspect, based on a lot of the talk from the G20 ministers about a carbon price, around the IMF saying a carbon tax, I can very much see the need for both carbon with a direct carbon tax pricing, but also the importance of the carbon markets and all the things you're talking about, because the two are not interdependent, quite the opposite. They're complementary. And hopefully, I guess my issue would be, I would love to see that convergence amongst at least the G20 countries, and maybe all those others, as they set examples. And I believe Chris has come back, and he's going to win the last word. There he is. Chris, great to see you again. And you get the last word before we go to Q&A amongst the folks listening to us. Please.
Thanks very much. Yeah, no, I used to have very, very stable internet, and it completely went. I'm like running, going, "Wah!" So anyway, I'm back. Thank you. Apologies for dropping off. But yeah, you asked. There were two things: technical thing and a more macro thing. The technical thing is obviously the Article 6. If we can have that fully fleshed out and agreed. But I think on a more macro thing, when we look at the voluntary markets, I'd really like to see some certainty over the kind of claims that companies can make, because I think that's one of the things that is holding companies back. There is a fear that they're going to get called out for greenwash, or for for saying things that somehow are not okay around their climate commitments. So I think that's really important, because I think that will there's two things that we need to see really see that billions of dollars that are sitting there waiting to come into this market, and I mean that, billions of dollars. One of them is the certainty over the supply, and making sure that we've got a really good handle on the that's very high quality, but also what is it that you can say about a claim. So that's really where I think that will really help to coalesce things, along with the other points that have been made by the other panelists.
I'm on mute. If I had a pound for every time someone said to me, or I said to myself, I'm on mute, it'd be but no, thank you. That's brilliant. I'm going to hopefully want to unpack some of that a little bit, but there are some questions here from the audience, and I'm trying to read them without them moving on me. So, do you see any price convergence in the carbon emission trading in the compliance and voluntary markets? in your opinion, what needs to happen to make the convergence possible or not? I don't know who that came from, but it was kind of around my question anyway. So do any of you want to take that one? While you're doing that, I'm going to look at, we got 2 more questions that just came through. So first one is on convergence of the compliance and voluntary market. What's going to do that? Is it going to be policymakers forcing the convergence? Or is it going to be the voluntary saying we can only take this so far without it? Who wants to take this one?
I mean, I'll just put a comment in. I think that as you see carbon tax programs being developed, many of them are accepting voluntary markets to meet a certain percentage of the regulation. So some are required dollars, portion to cash, but some are taking offsets. If you consistently see more and more carbon tax programs taking in the voluntary credits as a legitimate to reduce the tax liability, then you're going to see the price convergence between the 2 programs. You're going to have more and more where, you know, there's a huge difference in price right now between voluntary market as well as compliance markets. But you will, you know, you see California takes in, I think it's up to 7% of offsets. Colombia was taken in up to 100% of offsets. I don't think they're there now. South Africa is taking in. So it's really bringing voluntary credits in as compliance credits. So I think that is one aspect.
No, that's great. And I would imagine even if you did have an international move to put a coordinated price, it would probably be in a step-up mechanism. So you would then always have the credits playing an important role shadowing that. So obviously most companies, business models can only reduce X amount of carbon per year through R&D and CapEx and things of that sort. So there's always going to be a need, and just simply the carbon credits would fall in line into whatever the step-up mechanism behind it in the pricing. So I think there's a real, you can see the pathway of the 2 converging and functioning in a complementary manner. Now, there's another question in here from the audience, which says, in relation to the topic and issues and ethical stakeholder capitalism, I'd be keen to hear any general thoughts from the panel on homeowners being able to profit and benefit from recycling money to preserve and protect their related aims and rights in relation to the aims in general in context of carbon markets, offsetting and utilization. Now, I'm not sure exactly the context of it, but I think they're trying to understand how the average, you know, I guess it's the average homeowner and shareholder can participate in this. And I do know some of the Scandinavian markets have very micro ones in which there's engagement on a local level. And I don't know in terms of recycling money, whether they're making reference to tax advantages or abatements, but I don't know if any of you in your work, either in Bank of China or the 2 of you in your work that you've done on the voluntary committee, was there any discussion around how homeowners or individuals can recycle their money and preserve and protect their related aims and rights in around carbon markets and offsetting? So how can we bring the individuals in, I guess?
So let me just change that. I'm going to interpret it one way. Chris has interpreted it another way. The way I interpret it is how do individuals, landowners participate in the carbon markets? So if you look at the UK Peatland Code or the UK Woodland Carbon Code, they allow individual landowners to protect their woodlands and effectively get a benefit from the carbon. So there's a lot of individual owners of forestry that are participating in the domestic market in the UK. Also, if you look in the US, there's multiple agricultural practices that help reduce emissions, and there's another case where carbon credits are being generated by change of practices from agricultural producers that are individuals. So that's one way. I'm not sure I'm exactly interpreting it, but it's a way that they get benefit and can participate in the market.
Yeah, and that's a great interpretation. I suspect that's probably the direction they were going in. And I do know that in the UK, there's discussions around how, as certain types of agriculture, whether it be through livestock and that, in repurposing the land towards carbon sequestration. So what's great about this transition is it's really being pushed and accelerated by technology. So nowadays, you've got everything from Beyond Meats that are giving meat substitutes to basically laboratory-based meat. So there's ways to take land that maybe was used for livestock, repurpose it, and then give benefits, being able to measure it. So I would suspect, depending on the jurisdiction, whether it be in China, the UK, EU, those are areas of policy that are probably developing. I know there's discussions here about the stewardship in the UK of repurposing land. And I suspect that's going to be a very, very big topic going forward. Claire, do you or does Chris any comments on this question?
Yeah, I mean, I guess looking at it from the other way, I guess you could look at it from the point of view of can individuals actually come in and fund projects, and of course that can be done via the idea of buying offsets, and we see it a number of offers. You've seen it for years in with aviation, so you can offsetting your emissions for the flight. There's been some approaches through things like credit cards, and I think you'll see more of that. I mean, I think you will see these types of approaches grow. There has to be some care around the way this is done, because again, we don't want people to view that they can just go and literally just offset their way out of reducing emissions. It should be done, just as we are talking about net zero pledges. That people need to find ways to reduce their emissions, and then the emissions that they cannot reduce, immediately, we look at that there should be compensation for, right? So you should be looking at ways to reduce emissions, but also then compensating on the path to net zero. It's this important idea of, it's the way of being able to get cash into projects that wouldn't get it otherwise. And as you say, whether it's nature, whether it's forestry or agroforestry, or of course technology. And I think that's going to be a really interesting area where people want to contribute to, these technologies out there that are growing quickly, but we really need to scale them to be able to reduce, to reduce emissions as quickly as possible.
Oh, that's brilliant. I love how we've all taken that question and interpreted different ways. So hopefully not only did we give the person who wrote it the answer they were looking for, but we've given them alternative perspectives on that. And I do think that's a really interesting take. Whether you're crowdsourcing something small that can scale up individually, or whether you're a large ETF that's looking to do it, I think that's an interesting way where potentially that the individuals can be involved in this as well. And I was also just kind of thinking offhand, there may come a point in the next 5-10 years when individuals need to think about purchasing credits themselves. And what's particularly interesting is China, as Claire has pointed out in her speech, has basically allowed, for the time being, only 5% of carbon can be offset by credits. But at some point, individuals, and the UK, there's going to be a mandatory move towards heat pumps. As of 2025, all homes, new ones, will have to have heat pumps, and by 2040, all of them will be. Whether or not that could physically be done, whether the carbon credits will have to play a role in that, depending on different things. So I guess for the person who gave us that question, we've given them a potpourri of answers and a variety of things. I believe our time is unfortunately come to an end. I would like to thank all three of you, as well as Andrew and Damien, and of course the City of London, for putting this together. The cooperation between China and the UK it really goes back a long way in this green area. As I said, remember when the Bank of China did that, the covered green bond, with, at the time, Deputy Governor Yi Gang was on the floor of the London Stock Exchange when that was issued, and he's now the governor. And so it's really quite a great relationship. And I think there's seriously nothing more important than us continuing to cooperate and accelerating the transition to a sustainable global economy. Now with that, I would like to hand things back to Damien to close. But again, I'd like to thank my panelists again, Chris, Claire, Kathy, you guys are just fantastic. And thank you for contributing to the discussion. Damien, back to you.
Michael, thank you very much. And Kathy, Claire, Chris, that was absolutely tremendous, and it's one of the downsides of not being physically together, that you can't have an incredibly warm round of applause, because you would have had, I think, huge appreciation from those who've been on the call. It's been just fascinating, a real privilege to hear from you and from previous speakers. I think the call to arms there, not even close to the right corridor, and it's closing quickly, as Michael was saying, but actually some really tremendous potential for what can be done around convergence, setting out, as Kathy did, setting out how markets can grow, putting us on the right pathway, this sense of a meta registry to avoid double counting. The way that you brought to us, Claire, how there has already been strong progress actually in converging markets in China, and the next steps along that pathway. And Chris, I shall take with me that sense of a global carbon price does exist, and it's pretty close to zero, but also that sense of real progress towards high quality of supply, and actually a real appetite on the buyer's side, on the investor's side. Can I also say a big thank you to our co-secretariat, which is the People's Bank of China Representative Office for Europe, and their chief representative, Madam Jin Mei. We really value the cooperation with you and your continued support. And a big thank you also to IHS Markit for your partnership in making today's workshop a really huge success. So thank you to everybody who's been online. Thank you to all of our speakers and panelists, and we look forward to meeting again soon. Many thanks indeed. Bye-bye for now.